In 2022, what brings Christmas in July? A disinflationary overstock consumer recession at Christmas. Now, Michael Burry has been tweeting non-stop since last year, rapidly. In fact, last year he made some bold predictions about the current market, and it's all coming through. This includes the crypto market. This includes the stocks and shares market. And earlier this year, we got information that Michael Burry is officially shorting Apple shares. And this was a huge surprise for almost everyone, so we have to understand why. Now let's take a look at the pricing history when it comes to Apple shares versus the rest of the market. In the early 2000s, S&P dipped as much as 47%. Apple sank 82%. Now the impressive thing is that the S&P 500 dipped 55% between 2008 and 2009. Apple dropped 61%. Now in 2020, the global pandemic, when the market dipped 34%, that's the S&P 500, Apple dipped 31%. Now the interesting thing is that Apple is down 22% this year, and Apple is no longer the world's most valuable company. They lost that place to Saudi Aramco. Now at the same time, Michael Burry decided to make a bet against Apple, the Cupertino company. So Michael Burry hedge fund also add long positions in Alphabet, Meta Platform, which is Facebook, and Discovery. Now here's where our little story gets even more interesting. Last year, the Big Short protagonist, Michael Burry, he made news for disclosing a $530 million short position in Tesla. Now, at the time, Michael Burry said that he had made a quick trade in which he thought the options bet were extremely asymmetric and the media was off by orders of magnitude. Basically, what Michael Burry was saying is that obviously Tesla was overvalued. And if you look at what's happened now, Tesla used to be worth $1,100 per share. Now, in contrast, Tesla is worth $675 in share? It's a big difference. Michael Burry made a huge amount of money shorting Tesla. Now the interesting question is Michael Burry right to be shorting Tesla and Apple and all these companies such as Alphabet? A tweet that he's deleted by now, but I will show this tweet on screen in the middle of the page so you can see it for yourself and read up all about it. Michael Burry seems to believe that the S&P 500 rebounded too strongly and too early for COVID-19 in 2020. Now, Burry thinks that the index could plummet 54% to 1,862 points in this year. Now, that's rather interesting. So, ladies and gents, this is where it gets quite interesting. Now, in the S&P 500 and the Nasdaq 100, Apple accounts for 7% and 13% of both index respectively. If these indexes have negative problems in the market, if they plunge, Apple will have a huge plunge in the market. Now, Michael Burry believes that the last 10 years in the S&P 500 has been similar to the decades leading up to the major dot-com bubble. That was the early 2000 crash, and the Dow Jones 10 years before the 1929 meltdown. Now, on the other hand, regarding Apple, Burry is betting against a tech giant that has managed to stand out despite the challenges. Apple hasn't just excelled in the mobile phone market and the smartphone market, but they've excelled in the computer technology market, creating smartwatches. Almost any product that Apple creates, it's an automatic success. But Burry is the kind of person that does a lot of research, and research that leads to good results, great results. Dan Ives, one of the main Apple bulls on Wall Street, a 2.0 version of the dot-com bubble, is not necessarily lurking around the corner. He believes instead that this year tech-driven bear market should split the sector into clear haves and haves not. So for a lot of people, a lot of investors, a lot of intelligent investors, they strongly believe that Apple will do well. Long term, I guarantee Apple will do well. But short term, they might not. They might see a huge fall, maybe 25% in the next bear market. You can never know. Now, speaking of legendary investors, Warren Buffett may have some similar opinions. Berkshire Hathaway, which has 42% of its portfolio allocated to Apple, remains at least bullish as it has never been. Now here we have two great investors, Warren Buffett, Michael Burry. They're both two experts in their different fields. However, they're predicting something completely different. And let's just say this, Michael Burry is always early with his prediction. He's always early, he's always ahead of the curve. So you should expect him to be early with his predictions. Michael Burry also thinks more short term with his investments, while Warren Buffett, he obviously thinks long term. This is the man who bought his first shares when he was like 8 years old. He's been holding Coca-Cola for decades. Two completely different investors, but they do things well in their own regards. Now here we have a list of investments within Michael Burry's asset management company. This is their portfolio. Over 206,000 shares have been shorted in their puts position. It's valued at almost 36 million. Overall, their portfolio percentage is up to 165 million in percentage. Now previously I have said that they invest in Alphabet. They also invest in Discovery, Warner Brothers Discovery, Bristol Myers. They've even had investments in Stellantis. That's a major manufacturer in automobiles. So it's a well-diverse portfolio. It's nowhere close to Berkshire Hathaway, of course, but this is a small management company in the realms of management companies. But I'm always skeptical about Apple, because Apple is one of the few companies who can actually rise the price of their products and still make a profit, and people will continue to buy. We see them do it time after time. This is a look at Apple's time lapse from their inception, from the iPhone's inception in 2009 till now, the growth trajectory. This is their income and revenue. And allow me to show you just how ridiculous this is. In 2014, at the end of 2014, Apple made $199.9 billion. That's in revenue. At the end of 2021, they made $378 billion. That's almost twice as much. And guess what? That's only 6.5 years ago. How have they almost doubled their income, their revenue, in that short period of time? You cannot underestimate a company like this. Look at their year-to-year. Look at Apple's year-to-year quantity growth. In the early parts, obviously, they had great growth. But around 2012, when Samsung started to introduce some great smartphones, the Android competition started to heat up in the smartphone market. Apple had a huge drop. They had a slight recovery in 2015, year-over-year growth. But there's only two parts in their history that they've had negative growth. That was in 2016. And the next one was in 2018 at 5% on average. In 2016, it was roughly around 14 to 15% on average. And as for 2021, they've had a growth in the early parts of 53%. So this is a company that knows how to perform well despite the market. As we all wait to see who's correct, is it Michael Burry for betting against the market, for betting against Tesla, betting against Apple? He's already proven that he was correct to bet against Tesla, because short-term Tesla shares have fallen quite a lot. And that's no surprise to Michael Burry, because he's always early when he's making his predictions. But now he's predicting the next huge downfall of the market. And in time, we will find out if he's correct, just like he was in 2008. So I hope you enjoyed this video. Thank you for watching. Subscribe to see more. Leave a like and leave a comment and let me know what you think. Thank you for watching until the end, and I will see you in my next video.